All right, welcome guys. I'm back. I didn't do an end of the day video yesterday because yesterday nothing had really changed, and then the news came out last night, so pretty much knew that today was going to set up with that stop raid or a bear raid, bull trap basically. So here's what we had going on. So yesterday, the video yesterday was titled, "We're going to have this looks like a stop raid for the bears," and what I meant was, it looked like it was a move really put together yesterday to try to get bears off of their short positions and get them to run stops so that larger institutions could take up those short positions. And that's what we're seeing. The reason why we're selling off today, obviously there's a headline, but the market most likely was going to sell off no matter what. Typically, they just find a headline to attach it to. So Wall Street loves to find a headline to attach a sell event to, so that people don't, people fear the unknown. Why is everything crashing? If they don't know, then they panic. But if they understand, oh, this is why it's coming down, so this is the reason, then I feel okay about it. It's all BS for the most part. This pullback was priced into the charts. That's why I said this looks like a stop raid. Volatility was rising yesterday. The breakout above the level was very not impulsive. Just it was a struggling breakout. We closed on the breakout, but basically just barely above it. And vol was rising, and everything in my video pointed that out. So go back and watch my last video. You'll see what I was talking about and see how I was trying to basically anticipate. I thought we were going to sell off. It looked like a bear raid. And so let's look at the charts, and we'll go into what we see today. So here's what's happening. Here's the NASDAQ futures. You can see here's the level of resistance right here at 11556. We overshot it just briefly and then have sold off. I've got this uptrend line right here that you can mark out that comes back. It's just a short-term uptrend right here, but we've broken it. We broke it here. And so the price action this morning was really just a back test. That was just a shakeout move, getting people to cover, getting people to, flip long, whatever. It was a buy the dip move that got rejected right at resistance. So it came right up, did a back test, and then has continued to fail. So down we go. This is what this looks like here in the NASDAQ futures. This is the NASDAQ. So this is the chart I was focusing on. For my video yesterday was a real, I spent a lot of time on this, and what I was showing was this breakout right here above this resistance level at 280.40 was not impulsive. What they did is they gapped it up, and then it just was chopping around, grinding, not really lifting off, but just grinding around that level the entire day. Closed the day, up a little bit, but it wasn't an impulsive breakout. When you see a breakout from a major resistance level, and this level's been tagged twice, this whole trading range, we've been rejected here. So when you break out, if it's a market consensus breakout, you should see a nice, good, solid green candle. Maybe you have a little sell-off there, but you should see some really solid buying coming in. And that's not what this is. This was a gap up. So the entire move, the impulsive move, was basically made in the futures market. And then when the market opened, they came out and sold it down to support. And then it just was just grinding around the rest of the day. So not what you want to see. And that's why I looked at the market and other areas to see what information I could get about this breakout. And that's why I saw the VIX, and I noticed the VIX was rising. Even though we're breaking out, the VIX is rising. What's happening is institutions, when you get that breakout, they're going to sell it the next day, and they know it. So what they do is they come out and they buy volatility. They're buying downside protection, and then they buy that when nobody's looking, and then they sell the market. They sell their positions. They make money on the volatility play that they got, and you got to look for that stuff. You're not gonna, if you wait for the volatility to spike and everything to sell off, the institutions have already made the money. So you have to take the positions when nobody's looking, when you have the signs, just there's signs there, but it's not obvious to the masses. when it's obvious to the masses, usually you're too late, or you get a bad position, and it usually doesn't end well. So that's why, hopefully this channel, I'm able to show you things that are not obvious to the masses. Everybody can see an uptrend after it's gone on forever, and they say that everything's in an uptrend, keep buying, and they don't see the signs that the trend is starting to die. They just buy the uptrend until one day the market says you're wrong. All of a sudden it just throws it in their face, and and then they realize they're wrong. So that's why people typically sell after big plunges, and they buy when things are just after they've risen a lot. That's because they're not looking at the underlying signs, the technicals. So here's what we got in the Qs. We're coming down into support now. This is support. I see it at 275. It's about 275. We're hitting that support right now, so that might be the end of the move for today. Or could slice right through this and get nasty. But watch for that 275 level. By the time the video gets out, you'll probably know. Now, we could also come down and fill this gap. There's a gap right here. And if we run down and fill the gap at 272.33, then we'll have to see, how that plays out, whether that's going to be the end. I wouldn't think we'd go much below that area. Of course, anything's possible, but that's what I'm watching for. Again, the selling happens quick. So when it really starts becoming obvious, by the time I get this video out, it's, a lot of the gains are going to be made. That's why, when I put the video out yesterday, when there was no selling, I was pointing out the things that I was seeing why there was going to be selling. And that's what you have to be able to take some risk, of course, and everything in this video is just my opinion, but I'm just trying to point out these concepts of understanding how the market works. The people that make money in the markets are the ones who are first, typically. You can make money once you get on a trend. Once you notice a trend, you can get on a trend and ride it, and that's completely possible. I mean, you can do that. There's no problem with that. That's momentum trading, and a lot of people do that. But usually, you got to be pretty quick to realize when the momentum's going to fade. So that's why divergences are helpful. Looking at that to understand, okay, momentum is fading. Now it's not the time to buy the dip. Now it's the time to look for a trend reversal. And that's essentially what I do, is look for trend reversals. All right, moving on to the SPY. Oh, and just going back to the Qs, let's look at the daily here. All right, so you can see here, we did have a doji yesterday, and we are getting confirming selling today. So I suspect there's probably some more selling. We could easily come down. I don't know where we're going to come down to ultimately, but I think this 271.40 level makes a lot of sense. And possibly down to this target area down here. I do have this down to this 252. That would make a lot of sense. And that plays into my bigger theme. So, I mean, that's ultimately where I'm targeting. I just don't know if this selling that just started today is going to carry through all the way down there, but it's possible. But down here on the weekly, this 254 down to 251 is a kind of a gap target area. I think what I think is going to happen is we're going to run down there over a couple weeks, or it could be days, but maybe it'll take a few weeks, hit that, and then from there we'll get a bounce back up to this 261 or 262, depending on when we get there. But again, what that does is recaptures the price channel for the entire bull market in tech. So tech is still in a bull market. This is the price channel that I have marked out, and we overshot it, but I'm looking for that to fail and come back down into the price channel, hit this first support level, and then bounce, and then work our way over time down to the bottom of the channel, and then we'll see. At that point, we'll see. Here's the SPY. All right, the SPY here, you can see, so really what that scenario I laid out the other day actually played out, and it looks like it's continuing to play out. What I was looking for is the SPY didn't quite make the resistance line, and Qs was sitting right at resistance. So I thought that maybe Qs would pop the resistance just slightly, and SPY would make its way up to resistance. And here it is right here. This candle right here, SPY made its way up pretty much to resistance. Q popped that resistance, and that was the end of the move. And now we're seeing selling. So I think this is going to continue. Looks like we do have a gap right here, so maybe they undercut the gap or fall short of the gap or something like that. But basically, that might be the end of the move for today. Somewhere right around 220. It's about 229.60, 229.70. Somewhere right around there will probably be the end of the move for today. Of course, we could undercut it, could keep going. When the selling gets going, it's if it just starts slicing right through support levels, that will give you a clean tell as to what kind of market you're really in, and how much how much panic and fear is really coming in. So watch for that, but if you come down to support levels and hold, then it's a relatively collected market and it's just collected selling. Although collected selling, if it progresses, typically turns into panic selling. And that panic selling is usually the move you want to look to cover your short positions into. So we'll watch the levels and we'll continue to see what's going on. Here's gold failing at resistance right here. 1906 is where I got this resistance. Overshot it a little bit, but we're failing. With the market coming down, the dollar should be getting stronger, and it is. Here's your support, 93.72. Dollar still holding above that support, kind of building a nice base right here, actually, if you see a nice base of support. Tells me that it's going up, and going up to this 95, going to the daily, going up to this 95.60. Here's the chart of the dollar longer term going back to 2011. Here's your uptrend line right there. We broke trend, built and we're doing a kickback rally. So I think running up to 95.60, hit that, find some major resistance, and start to work our way lower. Okay, moving on. Oh, let's look at this PAAS. This one still above support here, so not that weak. It is still moving up. I'm not seeing a rejection of resistance, so maybe it wants to fill the gap up at 34.62. I'd expect some resistance there, then maybe we roll over. In general, it's looking stronger than some of these other ones, so I don't know on that one, to be honest. XLV, second largest sector outside of tech, when it comes to market weighting, is continuing its downtrend. So you can see here's your high, lower high, lower high, and you've got a low, a lower low, continuing the downtrend. We ran up and did a back test of this broken flag. This is your flag right here. We broke the flag, hit the measured target at 101, run up and do a back test, and get rejected at resistance. So everything is very logical here. It makes a lot of sense. And we had negative divergence coming into play right here. Here's on the hourly chart. So you can see here's your high, lower high with a higher price. So the lower high on the momentum made a higher price. That's a negative divergent high. That tells you price is should go down in the future, and then you see price moving down in the future, which is today. So to me, 97 still on the map for this one. Financials. Stronger today. Interesting. So financials are catching a little bit of a bid, catching some strength, probably because bonds are catching a bid. Let's look. Bonds aren't that strong, actually. So financials are catching a little bit of a bid today. Who knows why? They're just, buyers are stepping in and buying some financials. So at this point, now that financials have entered this gap, to me, and we entered previously right here, and they sold off and then recovered. To me, that looks like they're going to come up and do a gap fill at 24.66. Probably get rejected there, maybe overshoot it just slightly, but 24.66 is the next target. This one, Philip Morris, I really like this for a long, just in my opinion. It's just a really good setup, basically, and it's starting to break out as well. So here's the thing with Philip Morris. I've been pointing out, we've had a series of these downtrends. Really, there was one downtrend, and this is your bearish falling wedge pattern. If I get rid of this line right here, we broke out of the pattern, and then it came in and it did a back test right here and just continued to sell off a little bit. But each low that it was making, each lower price right here, was a positive divergent high. So bullish divergence, the momentum is telling you that, okay, this downtrend is about to change and it's going to become an uptrend, or at least some sort of a solid move up. And that's what this kept telling me. So every single time we were making new lows, they were divergent lows, positive divergent lows, and those are buying opportunities. And so now we're starting to see price starting to kind of creep higher. The other thing that I like about this, if you go to the daily, is this big downtrend line going back here on the daily, going all the way back to 2017. And you've had this nice downtrend line. You had the breakout. You had a breakout of that downtrend right there, which proved to be a false breakout, bull trap, and that proceeded by huge selling. Well, we broke out again. So a double breakout usually is going to stick. And so now we're looking for signs that it does stick. And so and so they make it look like it's going to stick. Then they fade it, sell it off. It does a back test. This is the area where it really should hold. So you have low risk area for a long position. You've got bullish, positive divergence, and you're starting to see, breakout on price. So going to the hourly, you can see, and I drew this other trend line here that we started to make, and we've broken out of that. So in general, everything looks good to me for a long position. I think this is probably your first target. Looks like it's right about there, maybe slightly higher. Yeah, right about there at 77.46, I think is probably the first level that this thing's going to want to run to. Here's Netflix. I don't see anything bearish right now, except for the fact that it broke the trend from March. So it's bearish because we broke the major trend, but in the short term, I see bullish momentum across the momentum indicators that I use, and bullish price action. So could easily, I don't see any divergences yet. We could, they're just not there. So this could back test, until we see some sort of change in posture. The short-term trend is up. The longer-term trend is, basically sideways or down because we broke that trend right here. That's all I see there in that one. KHC seems to be holding up under this, this support right here at 29. It's about $30. Seems to be holding. So I was hoping that we could get this to move down to $25 and make this inverse head and shoulders pattern where you've got this left shoulder, the head, and then make a right shoulder. That's the ideal setup. Maybe we get there. As of right now, we're holding. So this might want to work its way a little higher before breaking down. I'll wrap up with Zoom, and then just anybody that wants me to look at some stocks, throw it in the comments, and I'll try to cover those. I can't get to them all, but I try to cover the ones that actually look interesting with some sort of a setup, whether that's bullish or bearish. So Zoom has a bearish setup, and here's why. Momentum indicators, PPO and RSI on the daily chart, which is kind of a larger term setup, has negative divergence. Clean and clear negative divergence here on the daily. You can see momentum is fading across the PPO and the RSI, and price is still going higher. What that means is it's just fewer and fewer buyers bidding this thing up. It's just kind of the last of the buyers buying the stock. They're the bag holders, essentially. Every time there's an up move, there's always an end to that up move, and someone gets stuck holding the bag because they don't realize that they are the last of the buyers. And that's what this looks like to me, is that this, the price keeps moving higher, momentum is moving lower. So we're looking for a sell signal in this one, some sort of powerful breakdown, break of trend, something like that. Until you get that sell signal, there's nothing to do. But wait, it's not something you want to continue long on. But it is something, you could ride it long if you're already long, just move your stop, keep your stop rising. But I'm looking for the next trend, which I think is to the downside. I'm looking for the sell signal on this one. So I look for these setups. I look for these wild stocks that just seem to never sell off. And I look for that momentum to start to fade, because when you get these really strong momentum players, when the momentum stops, the move can be drastic to the downside. So that's what I look for. And oh, and then, I do want to cover this DraftKings. This one's not playing nice with me. It continues to move on the daily. We still have negative divergence. It's still there, right there. And as long as it doesn't move up too much more, we'll still have that on the daily. If you look at the hourly here, it's still there. It's just barely there, right? They're trying to break it, but they haven't quite broke it. Clearly in the PPO, and price continues to back test. It's just walking up this trend line from underneath. It's not allowing, the price isn't allowing it to quite get to the trend line. So because it's not quite there, they're not rejecting it. It just continues to kind of grind below it. And so at some point, I'd expect to see some sort of final move up to that trend line or a breakdown. And probably up, I guess. Probably just some final move up to the trend line, which is up there a ways. So yeah, we'll see. We'll see if these momentum indicators get burned through. If they can stay intact, negative divergence can stay intact, then we'll look for the down move. Oh, and I don't know if I covered Tesla, but we need to watch this one as well. And because this is another one of those high-flying super momentum stocks that just people wildly buy. They don't even care. They just, most of the people that are buying this aren't reading technicals. They just think the stock is going to change the world, and they're buying it out of speculation. They're speculators essentially, and so they don't care. Essentially, they don't care what the price is because they just think the price is going higher. It's a classic kind of bubble mania. Things never go down mentality, and that's what we're seeing here in Tesla. And we're right on trend. Again, like I said, we were grinding trend. I expected us to come back down and hit the trend line. Here we are. Haven't broken yet. They tried to break it today, but it couldn't quite break. This thing's not going to break most likely during the market. There's going to be some big gap down, trapping all the bulls that were bullish. They're going to gap it down. They're not going to give everyone an opportunity who's just been riding this up to just get out intra-market. No, they're most likely they're going to trap them overnight, and then you'll get the big sell-off when the music stops and all the people start selling after that trap is set. So that's what I'm thinking is going to happen. When that happens, I don't know. Obviously, we're still above trend, and so just watching for that. That's all I got, guys. Thanks for following along. I appreciate it. Leave me a thumbs up if you find some sort of value in the content, and I'll catch you guys on the next one.